Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Andrew Hunter, co-founder and economist of Adzuna, to discuss labor trends in the public and private sectors and the impact of the Great Resignation. Andrew, it's great to see you again. Welcome back to Trade Talks.
Lovely to see you, Jill.
All right, let's talk about the current state of the labor market. Any improvement there?
Well, so this job market continues to baffle and confuse economists around the world, as well as in North America. What we're seeing is hiring activity continuing to surge. If you look at last month's jobs data, over 500,000 new jobs added within the month. We've got inflation playing its part in recent weeks, but we still have this holdback from the employee community and this imbalance in the job market where there are lots of vacancies up and down the country, but just not enough people to fill them.
Do you see the Great Resignation ending anytime soon?
The data suggests not. So the most recent information shows that we're at around 3% quit rate, which is a historic high. And that's quite worrying for the labor market. We're not seeing that trend down. It has plateaued, but it's concerning to see so many people leaving their jobs. And the interesting thing is looking at the sectors where it's happening the most. And the real pattern that we're seeing is it's jobs that are in person and low paid. So think hospitality, leisure, construction, manufacturing. It's when you have to be there on site. That's where we're seeing this fall away in employee activity.
Yeah, I mean, you see everywhere. There's for hire signs, just everywhere you go, whether it's local in the malls. So what are companies doing now to hire talent before the new year? Are there any tactics or benefits that are most popular right now?
So as per usual in the build up to the festive period, there's a real surge in demand for retail workers. And that's where we're seeing a lot of the new tactics and big bonuses being paid for signing on. Money talks in this market. Job seekers are looking to keep pace with rates of inflation and high rates of hourly work, as well as, some eye-watering signing on bonuses. Amazon paying up to $3,000 for new hires. That's pretty consistent behavior across retail as well as hospitality. I just don't know if it's going to be enough for a lot of these smaller companies that don't have the deep pockets to be able to pay over the odds.
Right, and that's a great point that you make. So if we focus on retail, whether it's managing hiring now that, whether it's hiring and retaining now, given the competition for talent and the labor shortage, what are they doing?
So I think not everyone's throwing money at the problem. If you look across the retail landscape, there's a big focus among retailers around retention of employees, offering increasing amounts of flexibility to new joiners as well as existing staff, and looking at things beyond pay, like incentives for childcare, and I think academia and progression on that front as well. Not just thinking about an employee active in their current role, trying to create a pathway for the future for those folks seems to be a tool that lots are using. How effective will it be? I think we'll know in 6 to 12 months' time.
Are vaccine mandates from governments and employers impacting hiring? In other words, are a lot of companies requiring vaccines even if they're not legally required to do so?
So the top 3 sectors that are requiring vaccinations for work are reasonably obvious. So healthcare, social work, and leisure and hospitality. So the healthcare stuff is obvious, and then the frontline workers, we're seeing that activity. Less than 1% of job ads across the US are actually mandating vaccines. So it's still relatively in the minority. And it's actually quite interesting looking at tech. If you remember when the vaccine mandate started coming out, the likes of Facebook came out and said, okay, you're not coming back to the office until you're vaccinated. Now they haven't rode back completely from that, but we've seen the rates of tech employers stating they require a vaccination to be dropping off a bit, which tells me that a lot of these tech employers are sitting on the sidelines and waiting to see what happens in the economy before making big statements. Because I don't know about you, but I tend to change my mind every 3 months about what the future looks like when it comes to the job market.
Yeah, it's baffling to me, Andrew, with so many people either leaving work or not going to work. I mean, unemployment benefits have run out, stimulus packages have run out. We need money and healthcare benefits to survive. So it's just baffling to me, even with the incentives that they're offering, that they're still having a really hard time filling positions. So what will happen to the employment landscape as we approach 2022 from your perspective?
So labor force participation currently sits just above 61% across the US. So that's 61% of people who are eligible to work are actually in work. Just before the pandemic in 2019, that was around 63.5%. And that's where we'd like to see the numbers trending back towards. When you and I were kids, the number was more like 66, 67%. That feels a long way away, that level of participation. So we need to see that macro movement back to fuller employment across the US. How that's achieved is the $64,000 question. There's a lot being done to stimulate employee activity. I think it's going to take time. I was hopeful that we would see a real flood in activity from job seekers coming back into the market. And I would score that return to work as a 6 or a 7 out of 10. I was hoping for a 9.
Interesting. All right, Andrew, great to catch up with you as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.